What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about Virgin Galactic. I want to go over some of the current data points, break it down on what shorts have been doing, and realistically, is right now a good time to buy or not? Before I get into any of that, make sure to hit that thumbs up and subscribe. And with that said, let's get right to it. So ultimately, Virgin did close flat despite that nice spike first thing and good momentum to $1.83. It did get dragged down with the broader market. A lot of volume though, so this one stood out because 9.2 million shares were traded, 8.8 is the average. And there was no news, no SEC filings from Virgin, so it was rather quiet. So the last news and SEC filing did come out on the 27th. So it's kind of odd to see higher volume on a Friday. And these are all the transactions that did occur on the secondary market above $100,000. Nil. So once again, that does insinuate that a lot of the volume done today was algorithmic trading. And aside from today though, you do see the dark pool has been very, very active. So these are all the transactions similarly over $100,000. So it seems like this is where shorts have been really playing behind the scenes. So of course not on the secondary market. Secondary market does influence the stock price. So of course that's something to anticipate and whatever else. But when it comes down to Virgin, I did do a video summarizing their recent earnings, and I went over the good, the bad, and the ugly. And still since then, I haven't gotten that warm, fuzzy feeling from their earnings. And similarly, big money is not really getting in because it's the same thing. Like they're burning through a lot of money. So based on their last earnings, roughly about 448.19 million from operations is being burnt. And so far, based on what they disclosed, about 982 million. And that's how much cash and cash equivalents they did have as of December 31st, 2023. So realistically, probably at the tail end of this quarter, probably actually in fact this month alone, they are going to be diluting, if not early next month. But overall, that's very de-incentivizing for investors to get in right now. And plus what recently was disclosed prior about Richard Branson not really putting any money up front, that again kind of makes things very, very problematic. So ultimately, like Virgin is not necessarily doing the best. I did insinuate my last video that most likely it is going to be continuing to be flat, stagnant, if not red, throughout the next several months. So the downtrend is going to continue up until the Feds do confirm that they're going to be cutting rates. So I want to play this video near the tail end because this will give a little bit more insight on the current data and potentially when rates might be cut. Going over what shorts did today, they did increase about 68,000 shares. 23.21% of the free float is being shorted. 84.62 million shares overall are being shorted, and cost of our average is 1.52%, and then utilization is 81.29%. And as I've said in the past, I definitely do not see Virgin Galactic being a squeeze play. The only reason why I am bringing this up is more just to analyze. So the fact that Virgin did close flat, and plus throughout the trading day it was mostly green and shorts increasing, it does insinuate that they do not feel it was justified. And so once again, this information isn't necessarily the best and most optimistic. Looking at the options though, so $103,000 in calls being purchased versus $109,000 in puts. Sentiment wise, somewhat evenly divided, but 41% of all the options being done today were bullish and optimistic. Of course, you have to factor in by shorts increasing, there's a fair share of those shorts probably hedging through options just in case Virgin does come out with a surprise piece of news causing it to go up, so that way they're kind of hedged. Looking at some of the call options that are purchased, or I guess that were purchased today, consensus for it to be above $2 by the end of next week. And looking at puts, there's a consensus for it to be sub $1.50. So I'm going to talk on technicals and all the other fun jazz, but with today being Friday and it closing above $1.50, you are going to see 2,000 being exercised going into this week. So most likely market makers are going to be buying that first thing on Monday. So potentially you might see a very, very small spike associated to that, or it might be in fact pre-market, but still market makers don't really have readily available shares of Virgin Galactic on hand since it is a very volatile stock. So that's something to kind of consider. Aside from that though, right now with it closing at $1.72, it is trading between this S1 and the pivot. So $1.64 is going to be that next strong support, and which wasn't even tested today. And then $1.76 is going to be that next strong resistance. So all in all, it was kind of a boring day. It did break past this pivot point, but still, like I said, not really enough to stay there. So this is why it got dragged back down into this range. But moving on though, looking at some of the technicals and other fun jazz that you need to know. So starting off with some fundamentals. So latest analyst ratings, because it's been a while since I've given an update, there was a lot associated to their recent earnings, some optimistic, some not. So you do see TD Cowen, Oliver, who does have a 52% success rating, gave a buy and a $2.50 price target. Then Triest did give a $3 one. Looks like a sell rating from Wells Fargo, and also Goldman Sachs did give a $4 price target. So as a consensus, $2.81, and that does represent a 63.37% upside. Even looking at the latest Morningstar report, it does show the fair market value for Virgin being $4.68. So of course that is somewhat optimistic. And even looking at the Elliott Wave technicals, it does have a pivot point right here of $1.51. So for as long as Virgin is above that, which right now it is, then it is anticipated to get to roughly the $2.18 to $2.32. So like I said, somewhat stagnant, if not flat. I guess on a return on investment, that's kind of good amount from these levels to 230 potentially, but still you'll want to watch for the technicals and the support and resistance points going forward. But moving on though, looking on the actual chart, so it did today attempt to transition from the lower to the higher percentile of the Bollinger Band. And I'm looking at the top right chart because that's a 1-day chart. The bottom left is the 15-minute, and then this is the 1 hour. It's a good viewpoint on everything that's happening. But because of today, you do see a very nice deviation. So the blue line above the orange shows a very good bullish sentiment underlying. So that could be a good sign, but still at the same time, you're not really seeing that being brought on by big institutions. It is more brought on by algorithmic trading, so just artificially, if that makes sense. Number of investors have been getting in, so retail is starting to get back into Virgin Galactic. You see every AI play out there just continuing to run, so I think there's a lot of optimism. But when it comes to it, you really want to watch for this transition into the higher percentile. It is also below a lot of the key pivotal moving averages, so the 50 and 100-day moving averages. So all in all, like I said, I think it is going to be stagnant, not really breaking above this $2 range, at least in the short term, unless there's something that comes out from the company itself to really justify that. But when it comes to the next big momentum higher, it'll be when interest rates are potentially cut. And so, like I mentioned, I'm just going to quickly play this video because it does talk on essentially what might be coming next based on the current data points and everything that you need to know. So don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And don't forget to take advantage of this promo. Simply sign up for a new account, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So that's an amazing deal. So take advantage of that. But like I said, let's get right to this video.
Let's take us through the numbers, Steve, and why some traders may call it a Goldilocks scenario, but is it really?
Well, it's a little bit of a Rorschach test is what I'm reading about it, Dom. And you can really separate the numbers into those numbers that argued for the Fed to cut a little sooner and then for them not to cut or cut a little later. When I look at the numbers, well, 167,000 of downward revisions. That spoke of slack in the labor market. You had moderating wage growth, and you also had a higher unemployment rate, up 0.2. A lot of that stuff can be turned around and be exactly the opposite, which is you had payroll growth still above 200,000, annual wage growth north of 4%, the unemployment rate still below 4%. So I think the Fed looks at this data and says, you know what? I'm not making any calls on this data.
Actually, I just realized my mic was muted, but both of those data points actually did come out today, in fact, so that's why it's relevant data, on a side note.
Especially because you have this big gap between the household and the payroll employment. I think they wait for all this stuff to shake out before making up their mind to do anything else.
Diane, that's the read, and that's generally what I've heard from some of the economists out there. Do you feel as though that's the correct way to interpret this data? And is this the way that the Fed is looking at this data ahead of key inflation data next week?
Well, the inflation data is really going to be important, but there's a big threshold to have the Fed change its sort of game plan in terms of a June rate cut and 3 rate cuts for the year, and that's their signal. The threshold would have to be either a very cool or a very hot inflation number to signal maybe a May cut instead of a June cut. But I think this sort of is steady as she goes. And that's really what we heard from Jay Powell this week as well. I think the most important thing in the data is that we're still continuing to see average hourly earnings picked up after dipping last month. And that bounce back and that persistence of new paychecks coming online is buoying consumer demand. And what the Fed continues to worry about is sort of walking this tightrope between not wanting to overshoot on having rates too high for too long, but then still looking at this and saying, well, we're still generating a lot of demand, particularly in the service sector, where we worry about inflation being the stickiest.
So yeah, there you have it. June potentially is the next target. So of course that would really help a lot of growth stocks such as Virgin Galactic. So most likely it might just be stagnant up until then. But then again, I'm not a financial advisor. So what's your thoughts? Do you think that it is going to trend higher in June, or do you think it's going to kind of go lower? What's your viewpoint on Virgin over the last little bit? And give yourself a shout out if you've been buying or selling, especially associated to the recent earnings. So don't forget to hit that thumbs up. And with that, appreciate all of you watching.